And I think it could trigger a Bitcoin bounce to 25.5, maybe 28. I think it could create a dollar bounce, a gold bounce, a silver bounce, and even a stock market bounce here. Yeah, so early in my career, absolutely. It's such a great learning tool. I mean, it seems very tedious. I know a lot of traders are like, oh, I don't want to write down what I did wrong or what I did right. But by doing it, you always ingrain it in your memory a lot better.
Yeah.
And you'll see that people that do that don't make the same mistakes as many times as people that don't do it. Right, because we tend to have a bad trade, and initially we're upset with ourselves, we're upset with the market, but then we let it go, and you just don't think about it again, and then the same emotional triggers come in on the next trade or in a trade many trades later, and we tend to want to just do that same thing again. But by reading over your mistakes and writing them down, you'll likely avoid them much, much sooner. And the bottom line is, as a trader, I think what's important is to get to profitability as soon as possible. We don't all have unlimited funds, right, to be able to lose and lose and lose. So you have to do things. If you're dedicated to trading, you have to focus on getting there as soon as possible and doing the right things to do that. I did do paper trading.
Yeah.
So I think paper trading is good for learning your platform.
Yeah.
And also you can learn techniques to just see, did this work out?
Yeah.
But the one thing that paper trading doesn't do is it doesn't trigger the emotion that real money does.
Absolutely.
And so I think that's just something that people have to realize, is that it's great for learning your platform, because the worst thing, and I've done this before, is I'll by accident click the buy button instead of the sell button, or and then you're like, holy crap, I'm long this stock, I thought I was short. But yeah, it's that emotional side that is real money triggered, and that's the kicker, right? That's the big. Well, I think so. Number one, the trading sentiment when it was at 68, 69,000 was just insane. I mean, it was at the level that, and again, this was early in my career, but the .com bubble back then, it was at the same level of hysteria, where you had numbers being thrown out there that were so ludicrous that it just was. As someone who comes from the stock market, when you're talking about, it's going to $1 million in a month or two or whatever, it just doesn't make sense. So you see that, and then kind of when you get into the psychology of it, as you see things adjust, you're right. At Bitcoin sub 20, that's where people start to get nervous, right?
Yeah.
So once you got to 30, there were so many people that jumped on the bandwagon and said, we're going to 20. But then when it got below 20, that's when people started to get nervous, and now we've seen it just recover just above 20. So I still think it's got more downside. I really do. If it's anything like the .coms, it's going to get worse before it gets better. But there are bouncing opportunities, right? So for instance, I'm long Bitcoin right now, still with a target of 25.5.
Really?
But I'm not going to hold it for 70,000 or 60,000. It's a shorter term view.
Okay.
I do. Yeah, and I think there's so many other things. There's so many other things that the investing public need to recognize, like the dollar, right? The dollar plays a huge role in commodities and in Bitcoin. Bitcoin's kind of a commodity at this point. So the fact that the dollar's been ripping so dramatically higher has put pressure on it, and I think the dollar is going to pull back, and that should actually. About a week ago, I was expecting it to kind of stall out, and it's still pushed up. I think it is down today, last I checked. But you're right. I was surprised at how extended it got. Mm-hmm. But it almost makes sense in a weird way, because these inflation numbers make the Fed, or make the investing public, think that the Fed has to raise rates more aggressively,
yeah.
which ultimately does pull money out of the system and strengthens the dollar. So as soon as we see a kind of a fade in inflation or a little downtick, the dollar should. So I think, honestly, we're at that pivot point now. And I know it's very counterintuitive, because we just got this ridiculous PPI print, we got the CPI print, and they were so high. But in the PPI print, you actually started to see, if you took out food and energy, a little bit of a downtick. It was slightly better than expected. And so even though the headline number was really nasty, I think 11.1%, there is signs that inflation is starting to stall. And I think all you have to do is look at gasoline prices recently, copper prices, oil prices, lumber prices. They've all been collapsing. And remember how PPI works. So producers, that's the producer price index. So that's what their input costs are there, and then they pass those costs on to the consumer. So it makes a lot of sense that the producer side will see the first downtick in inflation, and then it will be passed eventually on through the CPI to the consumer. So I think we're there. I think, and again, the chart on the dollar is hitting major resistance here. So I actually think that this is the pivot point, and I think it could trigger a Bitcoin bounce to 25.5, maybe 28. I think it could create a dollar bounce, a gold bounce, a silver bounce, and even a stock market bounce here. I'm still a huge bull on gold.
Yeah.
I mean, everywhere I look, it's, and again, gold is something that takes a long time to play out. I've been a little surprised at how big the dip has been in gold recently. But if you look at the dollar, it kind of makes sense how much the dollar has ripped up. But I do think that the gold chart is going to have a rebound as soon as the Fed takes their pressure off the interest rate hikes,
right,
and you start to see kind of the investing public and the institutions realize that we're heading towards a recession. How bad is the recession going to be? Will the Fed then have to reduce rates and maybe print money again? It just starts this big cycle again for the reasons to like gold as a protective asset. That's a good question. So we know that, I think it's a foregone conclusion that at least 75 basis point hike in the late July. Yeah. But there is now the question of, do they do 100? And the only reason, so in general, I think the Fed doesn't want to shock the markets. But if they kind of start releasing a little bit of idea that they could do it, it is possible. And the reason it's possible is because there's not another meeting till September. So after July, it's September. And so they may look at that and say, okay, we want to do this because we're going to have 2 months to figure out if we need to do anything else after that. Yep. And then also you're getting close to the midterm elections, and historically the Fed does not like to mess around with elections with a bunch of rate hikes. So, September, maybe they would do another one, but I certainly don't think October or November they would do it. So it's possible. 100 basis points is possible. I think it's a huge mistake. I think the Fed is at a point where they're trying to play catch up and get in front of something, and so they're going to overdo it, and then you're going to see a bad recession hit. And the problem with a bad recession is, like, if this was 5 years ago, they could just print money because inflation was 2 or sub 2%. But how do you get us out of a situation like that now? Even if inflation comes back to 5% or 4%, it's still well above their 2% mandate. So how do you then print trillions of dollars, and what do you see inflation go to then? So it is a tricky scenario where their hands are much more tied. Oh my goodness, yeah. So I think if you look at lower income, middle income people who are spending most of their money on rent, on food and energy, it's much, much higher, right? Yeah. But we know that when they factor in what the inflation rate is, they're taking into account TVs and all these other things, right, that aren't necessarily the best gauge for lower and middle income families. So I think inflation is probably higher to the average American out there. I don't think they can. This is the crazy thing about it, is it's this crazy house of cards that they've built up, and they kept on building it and just using that easy answer of printing money to stimulate. And then I think you're at a point now where they can't do those same type of things. And so I don't see, I would be absolutely shocked if not only do we get a soft landing, but then how is it not going to be a horrendous recession at some point that they can't get us out? And it makes me worried that the stock market could have seen its highs for like the next 10 years, which really stinks if you're an investor, especially your age group, my age group. We're relying on the stock market to go up for retirement purposes, and if you get 10 years of just sideways action, that's troublesome. I would say gold is probably the main one. I hope eventually Bitcoin. It just has to mature into an asset. I think the most important thing to remember about Bitcoin is that it's 13 years old, right? 2009, 20, now we're in 2022, and remember, and people, by the way, people before it collapsed were always saying, oh, it's an inflation hedge and all these different things, recession hedge, but in reality, it was a risk asset. It will mature. I like to say to people, like, how many 13-year-olds do you know that are logical? So you have to expect that type of a young market to just be really crazy. Yeah. In 20 years from now, I think it's going to be a much more stable market. I think adoption is going to be key for Bitcoin. I think regulation, as bad as people were like always like anti-regulation, many people are now saying please regulate it because Celsius is filing for bankruptcy, Voyager, all these different things, and people are losing money. Now they want the regulation, right? But regulation is so important for the adoption by institutions and hedge funds. they need, and pension funds. I mean, people don't mention pension funds a lot, but there's more money in pension funds than almost anything else. There's trillions and trillions of dollars. And I always say if they just allocate like 2% into Bitcoin would be like $500,000, right? Yeah. So the only way they're going to do that is if they get some framework from the government and some protections. Like when someone can hack into your Bitcoin account and steal your Bitcoin and you have no way of getting your money back, it doesn't exactly make, people feel comfortable about it. And it is. So the positive is that we've already seen a decline in gasoline and oil. Oil was like just a couple weeks ago, $124, $25 a barrel. Yeah. And now it's, I think, in the mid-90s or so. So it's coming down. And oil almost fixes itself, right? This is the weird thing about oil and gas is that the higher it goes, the more people adjust their driving habits to drive less, which then is a demand issue, and demand shrinks, and then it brings the price down. But I think just the fear of a recession, and if we do get into a recession, I think you'll see below $75 in oil by the end of this year. I really do. At this stage, I think you have to just continue to hold on.
For dear life.
Yeah, exactly like it says. I don't think at this point is the time to dump it.
Okay.
Now, you have to, as a hodler or even as an investor, you have to be ready for it to go lower, though. I would dare say is that use it if you have the ability to dollar cost average, right? So even if it's $500 a month putting it in, it will bring your overall average down. And I do think that there's a huge upside at some point. It may be years away, but you have to start building for the future, right? It's all about building for the future. So at this point, it's too late to get out sub 20. It's less like, well, it's down from 69 to sub 20, or it's right around 20. You've missed that opportunity. But I think as long as you stick with it, the worst thing a hodler can do is change themselves from a hodler to a panicked, emotional investor and say, oh my goodness, I just lost this much money, I gotta exit. That's exactly what markets do to you. They make you, believe in a thesis, and then they'll push you to the extreme to get you to dump that thesis. So I would say just pick up a little bit more as it drops. Understand, I have downside to like 12,000, 13,000, but I've been in bear markets where things go way lower than even I think. And so you just have to be ready for it. And again, just buy a little bit more. Don't over leverage yourself. You should never have all your money in any one thing. But just a little bit of your earnings maybe every month, if you have that ability, just put them in there. I do. I do. I think as it becomes more well adopted, and this is, again, the chain has to occur where it's regulation has to come in, positive regulation, and then this kind of more and more adoption by big players. Like you need to see more of the Elon Musks, the Jack Dorseys, Mike Novogratz is a big one. I mean, these players have to continue, and you have to see more of them. And with that regulation, I do think you will see it. Now, it'll start small, but the beauty of Bitcoin is that, if you have 1,000 billionaires or 100 billionaires just buying small, that's a huge amount of money into Bitcoin. And then you add in more adoption in the global community just from retail investors, and it should easily see 500,000 in my opinion, especially if the printing of money restarts in the next major kind of recession, depression era. So bear markets are, I think we discussed this before too, it's like in bull markets people think they're geniuses because everything goes up. So no one thinks that they need to learn. In bear markets, you lose all your money, so then it's like, oh, now I have to pay for education as well, and that's really expensive when I just lost all my money. But the bottom line is, education is compounding your future profitability. And so you have to find quality people to follow that know what they're doing, that know the real keys to reading charts and to getting rid of that emotional edge, and really focusing in on self-discipline and human psychology. I mean, human psychology is such an underrated part of trading and investing, but when you trade, you are trading humans. You're trading everyone else that's trading Bitcoin at this time. If you can understand them, you can actually use it to your advantage. So I think this is the perfect time in a bear market. Understand that you don't know everything. I don't even know everything at this point in my career, and use it as an opportunity so that when the next market comes, you can double, triple, quadruple the money that you even would have. Yeah, absolutely. And I'm excited for this because people have wanted it for so long to know exactly, my mindset. How do I control my emotion? The discipline needed to invest. And then ultimately, what setups in the charts do I look for? How do I keep things simple, but at the same time be able to see the macro changes coming, months in advance, and be able to make calls like I did on Bitcoin at 68,000, 69,000, that it was going to go to 20. So these courses are going to have all of that stuff in it. It's about self-reflection, bringing yourself to the point where when you become emotional, you can actually step outside of your body in a way and realize it and then not react. Where you can look at other investors and you can analyze social media and use it to your advantage. And then again, going into chart patterns that I use on an everyday basis to kind of decipher what the high probability move is going to be. And just to be clear, there's nothing in trading that's 100%, right? But it's about finding multiple factors in a chart that are telling you the same thing, like it's going to go up or down, and then reacting to it and understanding that these three factors give me an approximate 80% success rate chance. That's good enough for me, means 8 out of every 10 I'm going to win. That's Hall of Fame material right there, and going from there. And I'm going to reveal all my secrets, the confirmation signal that I use on a daily basis, the river theory, the things like time counts. I mean, all of this stuff that you can't find in any books that I use on a daily basis to make these calls and make these trades, it will be in there. So I'm excited. I mean, I think this is a great way for people to invest in themselves, which will then create this future destiny with so much more financial success than would have otherwise been.